Hi everyone, welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the dollar versus the yen, as well as the euro versus the yen. And we're going to wrap things up with gold or XAUUSD. The Euro USD is starting to look especially interesting, and we could have some breakout opportunities on those yen pairs. So let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to click that subscribe button and also hit the bell icon so you get notified every time I post these videos. Also be sure to click the join button where you can become a member of this channel and receive 5 to 10 Forex analysis videos from me every single week where I analyze currency pairs like the Euro USD, the Pound USD, the dollar yen, gold, and many more. So you're going to get 20 to 40 videos every month where I show you the key levels I'm watching and how I'm approaching that currency pair. So you're going to get trade ideas from those videos, but you're also going to learn how I trade price action. First up, as always, is the Euro USD. And the Euro retested the top of a channel we've been talking about now since September. So this descending channel that dates back here to the 2019 high directed the price action throughout 2019. And I first mentioned it back here when the pair was approaching that 109 area support. So this retest right here did form a bearish pin bar of sorts, and that also triggered this 48-hour sell-off that we saw between Thursday and Friday. Now, I still maintain the same idea for the Euro USD, and that is that we need a daily close above this descending channel top up around 112 in order to send the pair higher. That's the same thing I said back here when the pair was retesting this area, but notice how we got this intraday rally up above the channel top, but the euro failed to close above it. Instead, it closed down here, which gave us this bearish pin bar. And that also kept this channel top intact as resistance. So for now, it's still going to take a daily close above this channel top in order to send the Euro USD higher, perhaps up in the 112.80. The pair is also now below that 111.75 level. So based on these two highs back here, as well as this one, I do think that sellers are going to try to defend 111.75 this week. We saw the pair try to recover on Friday, but it didn't quite close back above it. So going forward, I do expect this 111.75 area to act as resistance. In fact, I would put the resistance area between that 111.75 and that channel top up around 112. Now, as for key support, I do think that this confluence of support down here at 110.75 is going to be key. Notice how that's the bottom of this ascending channel, and it's also this horizontal level that we've been tracking now for several months. So to summarize, I do think the Euro USD is going to stay indecisive as long as it's above this ascending channel bottom and below this descending channel top. But I do also think that the Euro USD is going to have to make a decision because this is a terminal pattern. If we intersect this channel bottom and this channel top, the Euro USD over the next few weeks is going to have to make a decision. It's either going to have to break above it or below it. So that's what I'm watching for over the coming days and weeks to see if we do get a break either below this ascending channel bottom down here around 110.75 or above this descending channel top, which is currently at 112 or maybe just below it. If we get a break above it, I do think that the next key level is going to be 112.80, whereas a break below this channel bottom would expose the next key support around 109.90. Next up, we have the British Pound versus the USD or GBPUSD. And I still maintain what I said a couple of weeks ago after we saw this aggressive sell-off from the pair. And that is that I think we need to see a rotation lower into this ascending channel support before we see either a next leg lower or a break below it. So right now, the way I look at this is we have this swing high up here. And last week topped out right here, and the pair also closed back below that 131.60 area. So this level right through here has been key for the pair. And after this close above it, you would have expected 131.60 to act as support. However, we got a close below that level, just like the Euro USD closed below that 111.75 level. And notice on Friday, the pair sold off right from 131.60. So I think going forward, 131.60 is going to be resistance. And I would also expect this 129.80 area to serve as support based on these highs through this range that developed between 127.70 and 129.80. But just like the Euro USD, I also think that the pound is going to be difficult to trade as long as we see this type of sideways price action. So a move down here into this channel support followed by a close below it, that could open up a big opportunity for a move lower down into some of these key levels, including 125.70 and perhaps even 123.80. But first we need to see a close below this channel bottom. As long as this ascending channel is intact, I have to respect this short-term uptrend based on these higher lows, all right, and these higher highs. So right now the uptrend is still intact. However, based on this price action recently, I do think we could see further losses from the GBPUSD, a move down to 29.80 with a close below that, exposing this ascending channel bottom. If you want to stay conservative though, I would wait for a close below this channel bottom in order to short the pair. So trying to short the pair right now, as long as we're in this sideways movement, is going to be challenging and also risky in my opinion. So I really think that a close below this channel, if you are bearish to the British pound, a close below this channel is what's going to really open up this pair. So furthermore, if we see a close back above 131.60 and especially a move back above this high, that could indicate the next leg higher. But I do think that buying the British pound up here, as long as the pair is extended like this, and also up here near this channel top, that's also a bit risky. So I think that a pullback is necessary and we could see more losses from the British pound, especially if we get a close below that channel bottom. Next up is the US dollar versus the Japanese yen. And last week we saw this pair come off of this trend line in a rather aggressive way. So I first mentioned this trend line back here when the pair was retesting it. And notice how this trend line extends from these 2018 highs. It also connects with this high right here. And then this latest retest is what triggered the rotation lower. However, the challenge here with the dollar yen has been this sideways choppy price action. So notice how the pair, since it climbed above 108.40, has really just moved sideways. So this price action through here made it difficult to try to short the pair because there were so many potential support levels in the way, including that 108.40 level. So we were essentially waiting for a daily close below 108.40 in order to look for shorts. So with Friday's close, we have that, and any rotation into 108.40 this week could attract sellers. So it's going to be key to watch how the pair reacts to 108.40 as new resistance in the week ahead. As long as the pair stays below 108.40 on a daily closing basis, I do think that this 106.80 level is exposed based on these highs and lows through here. Now a close back above, a daily close back above 108.40 would negate the bearish outlook, and it would also re-expose this trendline resistance. All right, now last but not least, I do want to point out that last week's price action did carve the first lower low. All right, this was the first lower low in this sequence. So notice how this low back here was lower than this one, but since this low right here, we've had nothing but higher lows until last week's price action. So this lower low right here could be an indication of weakness. However, I do think that if we see a daily close back above this 108.40 level, that could negate the bearish outlook and turn the pair higher. So as long as 108.40 is intact as resistance, I do favor looking for bearish price action from 108.40 for a move down here into 106.80. Next is the euro versus the Japanese yen. And I haven't talked about this one in quite some time simply because for a long time the pair was just trading in no man's land. So yes, it's been within this ascending channel that I mentioned a few months ago, but we really haven't gotten any kind of movement from the pair. It's really just been caught in this sideways range. However, I do think that Friday's retest makes things a bit more interesting for the euro yen. One reason I like this structure is the fact that we have this broader descending channel. So if you notice, the euro yen has been caught in this descending channel since this early 2018 high. So this back here was the February 2018 high. And since that time, the euro yen has been moving lower within this pattern. So as of right now, a break below this ascending channel, so this smaller ascending channel right here, a close below that support level could re-engage this descending channel and extend the euro yen lower, perhaps down here toward this channel bottom around 116. Okay, so it is going to take a daily close below this support level though in order to attract sellers. As long as this level is intact on a daily closing basis as it is right now, there is a chance that we could see another push higher from the euro yen, perhaps up into this descending channel top. So right now it's going to come down to whether or not we get a close below this ascending channel support, or we get some type of bullish price action from here for a push up into this descending channel top, perhaps up around 123. So as of right now, I don't think there's a whole lot to do here, but I do think that we could have an opportunity on our hands over the coming days, especially if we get a close below that channel support. And last but not least is gold, or XAUUSD. And this is a perfect example of what can happen when you spot a falling wedge like this following an uptrend. So for a long time now, we've been watching this falling wedge, and I even discussed this pattern back here when gold was trading right around 1460. So I especially mentioned it through here when we started to see this first higher low following that 1450 retest. So notice how this candle right here broke out from this pattern. This was really just consolidation following the 2019 rally that we saw back here. So we had a rally, consolidation, and this consolidation signaled a continuation pattern. In other words, a break above it would likely extend gold higher for the next leg up. And we certainly saw that with a retest of our first target here at 1515 based on these highs through here. And our second target was that 1550 2019 high. And Friday's candle was a big one for the pair, and it's currently resting right in that 1550, perhaps 1555 area. So from here, I would really like to see gold consolidate and perhaps even pull back a little bit before we get that next push higher back above this 1550 area. All right, because so far the pair has really been straight up since this breakout. And so I would like to see some kind of healthy consolidation or even a pullback before the next leg higher. Now, will that happen? That's anybody's guess, but that is what I'd like to see before we get that break above 1550. Because right now, if we do see a close above this 1550, perhaps 1555 area, there is a decent chance that that could be a false break and we could see gold close right below the area. So I'd be really careful trying to play this with a close above 1555 right now before we do get some type of consolidation. But as I've been saying for several weeks, I do think that gold is staying very constructive based on this uptrend, consolidation, uptrend, and now we've had more consolidation. So this next leg higher could very well take the pair above that 1555 region. And if we do eventually see a close above that 1550/5 area, that could take gold all the way up here into 1590. So 1590 is going to be the next key level I watch. However, I think that the larger level here, the more significant one, is going to be this 1625 level. Okay, so I do think that gold is going to pull back at some point or consolidate, whether that be below 1555 or above it. I do think that we will eventually see some type of consolidation and perhaps a move lower into this new support at 1515. But all in all, based on this market structure, gold does look like it wants to head higher over the coming weeks. So going forward, 1515 is new support and 1555 is still resistance. So don't be surprised to see gold rotate lower over the coming days. But I do think that a push up into 1590 and perhaps 1625 is in the cards over the coming weeks. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.